Hey, welcome back to the Mining Pod. On today's show, we're joined by the Vice President of Investor Relations for BitFuFu, Charlie Brady. Thank you to Charlie and BitFuFu team for joining us. We really dig into the nuts and bolts of the operation, talking about their mining ops in Ethiopia, Oklahoma, cloud mining contracts, and then we kind of finish off with a final touch on the general macro landscape for Bitcoin mining stocks, or risk-on assets that seem to be selling quite a bit right now. A lot of red and blood on the timeline. Thank you again to BitFuFu for joining the show. First, a quick word from our sponsors, and then on to the conversation.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com.
Today's show is brought to you by Digital Shovel. Digital Shovel is a leading manufacturer of modular mining pods as well as PDUs and switchgears. Unlike many other competitors, their product is designed and manufactured in North America with a complete UL inspection on the entire unit, not just individual components. Additionally, Digital Shovel is one of the most vertically integrated manufacturers of over 75,000 square feet of sheet metal shop, SMT and wave solder PCB assembly, as well as final assembly all under one roof in Toronto, Canada. Their price point leads the industry when compared to products with rates as low as $69,000 per megawatt for a complete data center with smart PDUs and switchgears. To learn more, visit digitalshovel.com.
Today's show, we are joined by BitFuFu. Charlie Brady is here to discuss, all things that's happening with the company. I mean, Charlie, you guys have been moving into Ethiopia. You guys are moving into Oklahoma, cloud contracts, much more. So welcome to the show. You guys are one of the last public miners we have not had on. We're grateful for your time today.
Yeah, great. Thanks for having me on. That's really good to be here.
Awesome. Yeah, so we'll just start with a quick bio, and then we'll jump into some outstanding questions I kind of dug through from your guys' filings and press releases.
I'm a VP of Investor Relations for BitFuFu. I joined the company last May of 2024. The company went public in March 1st of 24, so just over a year public. And I've been doing IR about 4 or 5 years. Prior to that, equity research, sell-side equity research for about 15 or 16 years.
Awesome. And so what about the Bitcoin mining space kind of drew you to it, if you've had like a wider experience in IR and sell-side?
Yeah, I mean, from a personal level, I've sort of been involved in kind of the digital asset space for a number of years, not necessarily just on Bitcoin, but for a wide variety of different digital assets. And it's an exciting space. It's a kind of a cool community in general, particularly in the Bitcoin space. And so when the opportunity to join BitFuFu, which is I think a lot of people don't realize just the size of the company in terms of how much exahash and the megawatts we have. End of February, 20.6 exahash and 480 megawatts. And those are both going to be growing over time. So sizable company, good story, great management team. And so that was really the push to me to actually join the company.
Awesome. Okay, so yeah, for listeners like BitFuFu, correct me if I'm wrong, but is it based in Singapore still? Where's the actual headquarters for BitFuFu?
Yeah, the company's headquartered in Singapore. I'm based in the US, but the company's headquartered in Singapore.
Okay, all right. And the relationship there, I think most people might be familiar with, if they are familiar with BitFuFu, is sort of some asset spin outs out of Bitmain, and you don't need to go into all of that. That could probably take a little bit, but you guys grew really fast over the last year and purchased some assets from them, and now you guys are growing into the Ethiopia market, which I certainly want to talk about next, and then the Oklahoma market as well. Let's start off with Ethiopia. So you guys are responsible for most of the hash rate growth, I think, that we've seen in Ethiopia. We've had Kalkasa, who works in the Ethiopia Bitcoin mining market. He's sort of an advocate and a Bitcoin miner over there, and he's saying that there's well over 600 megawatts deployed at this point, and you guys are responsible for a large portion of that. I'm curious how you guys sort of came into the Ethiopia market and what the deployment process is like for you guys.
Yeah, we first entered the market really from we moved a bunch of machines from the U.S. market into Ethiopia into leased capacity. The company historically has been an asset light strategy where we leased all the capacity. And so we had moved some miners just from a cost perspective. It was cheaper to mine in Ethiopia versus some of the sites in the U.S. Although we still have a fair number of sites in the U.S. today. And then through working in Ethiopia at some of those hosted sites, we had the opportunity to acquire our first site. It's a majority-owned joint venture. We have the majority ownership. It's a 51 megawatt site in Ethiopia. So we had been there in hosting capacity, leasing capacity, and then we, had the opportunity to acquire some because the company has really pivoted to moving from purely asset light to actually wanting to acquire our own data centers, our own assets. So that was the first one back in October, I believe.
Awesome. And so for the Ethiopia sites, curious, like, how do you guys kind of think about like the valuation of those megawatts? So to walk into that question a little bit, we have a lot of Bitcoin miners who are deploying in South America or they're deploying in the Middle East, and it does seem like there's more of a premium on megawatts deployed in the United States, which would naturally push companies to find hash rate in the United States, find energy in the United States. But you guys are, very bullish in Ethiopia, moving strongly into that market. Do you think like the market's mispricing these things? Like, how do you guys think about deploying megawatts in certain jurisdictions?
Yeah, I mean, we're on 5 continents right now. So we are in South America, we are in the U.S., we are in Europe, we are in Ethiopia and Africa. And I think, at the end of the day, the two big factors for us are obviously electricity costs, as they are for every miner, and stability of the, regulatory environment and the overall environment in country. Clearly, the U.S. has a pretty stable regulatory environment. But, with Ethiopia, it's been a very pro Bitcoin mining country. And electricity costs, clearly they're probably some of the cheapest electricity costs in our entire fleet right now. And so I think is one worth more than the other? I think if you've got a low electricity cost and a stable environment that you're operating in, in my view, those are equivalent, whether it's in the United States or whether it's going to be in Ethiopia or whether it's going to be in Paraguay or somewhere else.
When you're talking to other investment bankers or people in the space, how do they sort of approach this? Because there are certain intangibles there, certainly relating to security, relating to government, relating to rule of law, things like that I think people kind of come into question. It's very stable to do business in the United States. Ethiopia does seem like they are very pro Bitcoin mining. From all our conversations, they seem to be embracing it in a lot of ways. So it does seem to be a safer bet versus other countries. But I'm curious if you get any feedback when you guys are doing road shows to kind of talk about BitFuFu. Is there any pushback on that point, or for the most part, are they like very excited about you guys finding like cheaper energy and low cost jurisdiction?
Yeah, you don't really get any pushback on as far as where we are jurisdictionally on a global basis. I mean, I would say, what the biggest question is, what's your cost of electricity? What's your all-in cost? I mean, that is the number one question I think we get probably asked at the top. We don't really get any pushback on, geez, you guys are Ethiopia, are you nervous about the environment? That just question really doesn't come up that much. And I think, a few years ago, we had one site in maybe Kazakhstan, which we realized was probably not going to be a good long-term place to be. And so we moved all the miners, 100% of the miners out of there into other sites. Because, on the cloud mining side, we do guarantee 95% uptime. And so having that stability of the network is important to us. And we do a lot of due diligence, making sure that when we go into an area, it's going to be a stable environment in addition to the electricity cost being competitive.
Love it. Okay, so moving back over to the U.S. and talking about this Oklahoma site, you guys deployed some XPs, are currently deploying XPs, S21 XPs, I should be a little more careful there since there's the S19 model as well. But you guys are deploying those units into that site currently after purchasing most of the rest of the facility. Tell me about the Oklahoma market a little bit, how you guys came into this acquisition, and some aspirations for kind of building on the Oklahoma region. We have a lot of Oklahoma Bitcoin miners who listen to this podcast, and they're always like interested in who's moving next door, like who's the new neighbor. So I'm curious how you guys kind of think about operating in Oklahoma.
Yeah, so that was it's a 51 megawatt site. It's again a majority joint venture ownership with BitFuFu having the majority ownership in that site. We are, as you said, in the process of, we already put some X20, SPX21 miners in there. We've got some more, I think, that are in the process of being energized. So that'll add a little bit of extra hash rate to that site. I think in terms of, how we came across that site, we've got a funnel of potential sites that we're looking at. 700 megawatts is kind of current potential. We said we want to add a gigawatt of capacity by the end of 2026, incremental capacity. And so we have this funnel of potential projects and data centers, not just in the U.S., but outside the U.S. And this was on the radar and came up. And the economics there are, exceptionally good. I think when we get all the SPX21s in there, we're going to be around 3 cents a kilowatt hour. So very, very competitive cost. Our cost to mine there when we get everything energized is going to be about $18,000 a Bitcoin before depreciation. So it's probably one of the best sites we have, actually.
Yeah, that's great.
Regulatory environment, they've talked about putting in a Bitcoin reserve on a state level. So some legislation is going through or is going through now, and it's they've got an organization there for the Bitcoin mining, and I think it's a very pro Bitcoin mining space. It's attractive space, and again, from a cost perspective, tough to beat.
Big players in Bitcoin mining demand stability, regulation, and trust. That's why NiceHash has moved its headquarters to Switzerland, a country known for its strong regulatory framework and for keeping its cheese locked in a safe. As one of the most regulated mining platforms in the industry, NiceHash provides institutional miners with a secure, compliant, and transparent solution to manage and maximize their mining output, delivering the reliability and performance expected from the best mining pools, along with firmware, monitoring software, and other essential mining tools. Contact a NiceHash representative today to learn why the top Bitcoin miners are making the switch to NiceHash. You can find out more info in today's show notes. And when you contact them, let them know the Mining Pod sent you.
Looking at that power capacity target, so he does say this in like your guys' last press release, I believe, 1 gigawatt of secured power capacity target by 2026. So that's a target, correct? And it's not necessarily like you guys have LOIs for all these things. It just means that like this is sort of like you guys have scoped out a pathway to 1 gigawatt.
Yeah, correct. Right. Again, that we've got a pipeline of roughly 700 megawatts of projects today that we're looking at. That'll obviously projects coming out of the funnel. But yeah, that's the goal. That's the target. Those are obviously not all under contract, clearly, but I do think we'll get there. It's over the next 2 years or so, end of 2026. We're pretty confident we'll get to that point.
Okay, yeah. And it says here that you added the 51 megawatts, and that brings you guys to a total power capacity of 164 megawatts with that. As of the last release I see from you guys, feel free to correct me if that number is a little different. In terms of like the Oklahoma site, the one thing that's kind of interesting there is like Google has some power campuses there. There's obviously other AI HPC in the region. How are you guys thinking about using these new sites in the United States, given that they're probably more grid-based and there's more opportunity for plug-in to AI HPC? And then on the other prong, you guys have this Ethiopia setup where you guys are able to mine Bitcoin over there. And there's probably not as much of a demand for AI HPC in Ethiopia, I'm assuming. Is AI HPC on your guys' radar?
Yeah, I mean, it definitely is. We don't have any today. I think one of the things you've got to do as a first step is to go out and acquire data centers, right? We've essentially, prior to Oklahoma, we leased 100% of that capacity. And so you've got to own the data center, really, I think, to effectively do HPC AI data centers. And so that's the path we're on right now. We're going to go and acquire more sites. I think at some point down the road, it makes sense whether it's a partnership or a JV or a co-location type of thing with Bitcoin and AI. I think you've seen a lot of the miners pivot and add that to their portfolio to diversify themselves away from that. And that's certainly something that we're very aware of and is on the radar. But it's not imminent because we've got to get out and own the data centers. But I think once we get a solid base of that, that's certainly something we'll probably take a pretty hard look at. Obviously, the cost structure building out AI HPC is multiple times of what it is to a Bitcoin data center. But I think if you get we get the right partners on there, you get the right customers lined up, and you get everything in a row, it's obviously can be a pretty good return on invested capital. So I'd say stay tuned on that for us.
Well, it is interesting because you guys again have this Ethiopia set up where like you're able to take advantage of, I assume, pretty good supply lines into East Africa via Malaysia. Indian Ocean's still pretty big, so probably takes a little bit to get stuff over there, just like it does take a little bit to get over the Pacific. But you guys have an opportunity to directly import stuff there. We know that there's been a lot of container manufacturers and parts and services coming into that region. So it's not like you're kind of setting up in the middle of nowhere anymore. And you're able to like mine Bitcoin. Well, I actually don't know like your cost to mine Bitcoin in Ethiopia, but you can tell us that in a second. But you guys are able to mine. Go ahead.
It's below 4 cents a kilowatt hour in Ethiopia.
Okay. Awesome. So yeah, you're able to do that. And then in the United States where, there's pretty stable grid connections, these data centers might be an interesting two-prong strategy that I've been thinking about for you guys. Just in terms of the relationship with Bitmain and some of these like power contracts and things like that, or some of these like ASIC contracts in the past, is it like more, in your opinion, is it better to focus on Bitcoin mining because of that relationship with Bitmain that it has been in the past? Does that kind of incentivize you guys to kind of stick with Bitcoin mining? To my knowledge, I haven't seen Bitmain really steer into other sectors. I mean, there's been some interest with the Bitmain executive team moving into AI chips in the past, things like that. But for the most part, they've mostly stayed with Bitcoin mining. Does your guys' relationship with Bitmain, or can you comment on that? That would lead you guys to kind of have a strategic decision one way or the other.
Yeah, I mean they're clearly a great strategic partner for us. They were pre investors in the company prior to the going public. We've got a 10-year 300 megawatt hosting agreement with them currently. We signed recently a 2-year framework agreement for 80,000 miners that we can kind of take as we need them as we expand out. So they've been a great partner for us, and I think will continue to be. I think in terms of, to really answer your question on staying with Bitcoin or not, I think, again, as I mentioned before we get into HPC, we've got to own these data centers. So I think as we go and acquire more of our own data centers and can either, whether it's, and upgrade the facilities and use that framework agreement with Bitmain to supply those facilities and kind of upgrade the miners and improve the operations there and take the cost down, that's going to be very important for us to do. Down the road, really, regarding HPC AI, I think, irregardless, I think, I don't see us getting out of Bitcoin mining in near to medium term or even maybe long term. So I think that relationship with Bitmain is going to remain an important aspect of the company, and they'll remain an important partner. Should they ever, decide to diversify out into something else, I think the fact that we've already got an existing partnership with them would obviously benefit us in that regard.
Definitely. Okay. Interesting. Yeah. Sometimes it's hard to get, the info on the commercial relationship between these things besides the press releases. So I was curious about that aspect of what you guys are up to. Let's move over to the cloud mining side. In your guys' latest releases, you guys talked about how you've increased the number of users for your cloud contracts from around 500,000 to upwards of 600,000 individual users. It seems like this is a large part of your guys' monthly revenue. So I just have a few kind of questions to rattle off. One, what do you guys sort of mean by users when it comes down to people who are using the cloud platform? And then two, how do you guys handle the payments? Is it denominated in BTC when you guys get the payment from a cloud contract, or is it in USD?
Just on the payments. So the customer can pay for the cloud mining in the USDT, Bitcoin, or Ether. Those are the three currencies that you can pay for to do that cloud mining.
Gotcha.
In terms of the the user base, you're right. We've seen a pretty rapid increase. We're at just over 600,000. I think it was 602,000 something hundred at the end of February of this year. And we went from 500,000 to 600,000 in about 3 months, and so we've seen an accelerating growth rate in that. In terms of it's a great question on when we say 600 plus thousand registered users, what does that mean? So these are people, customers that have gone to the BitFuFu website. They've gone through and done the KYC they've registered, they've an account, they've gone through a KYC background process. Now, there's not 600,000 people cloud mining at any given time. They're not all 100% on there. Some people will come in, some will come out. It's a mix of retail and institutional. So from a revenue dollar standpoint, it's more slanted towards institutional investors. In terms of sheer number of accounts, it tends to be more retail accounts. But then the reason for that is because the institutional customers, their order size tend to be multiple of what a retail would be. And so that's the reason that kind of the revenue versus the actual number of users shift, the way the mix shakes out like on that.
Gotcha. Okay. And then in terms of users, I think just my priors would suggest that most of the users would come from East Asia, but are you guys seeing that it's a different kind of spread of where people are geographically based and purchasing these contracts? And then for the institutions, I'm curious, like, is there any like Western institutions that are interested in purchasing these contracts, sort of like names that people would know that are operating here in the US or in Europe?
Yeah, we don't sell the cloud mining business into the U.S. market currently. That's something that we are very, very focused on doing. But we're headquartered in Singapore. We're listed on Nasdaq in the U.S., and so we want to be in the regulatory environment in just mining Bitcoin. Has been a little bit of shifting sands over the past few years. I think now we're getting a lot more clarity on that, a lot more regulatory friendly environment. And so we just want to be very sure that we, if we go to the U.S. market, we start selling cloud mining into the U.S. market, that we're following the rules. And we don't actually trip over some regulatory issue that we didn't realize. So it's something that we've been actively looking at. I think you will see us do it. I can't give you exact time frame on that, but we will. I do believe we'll be in the U.S. market. But the majority of growth has really come from Asia and also Africa. We've seen a lot of growth in there. In terms of institutional, I obviously can't name any names, but they would be non-U.S. companies because we don't sell into the U.S. market, so they would be non-U.S. domiciled companies. But it's the institutional side is interesting. It's a mix of high net worth family offices, hedge funds. There are some individual companies that want to be involved in Bitcoin mining, but clearly don't want to go out and have to do all the complexity and the upfront investment in Bitcoin mining. And so this is a way for them to get involved in that without in a pretty quick and easy way to do that.
Yeah. Definitely. And are you guys mostly seeing, you might have mentioned this already, but do you think it's like a retail driven phenomenon for you guys, or is it institutional, that growth from 500,000 to 600,000 users? I mean, it's a pretty significant
in terms of the number of users, that's more retail driven than it is institutional driven, which, not surprising on that. But the revenue side still is majority institutional generated revenue on the cloud mining side.
Okay. Yeah. I mean, that would make sense. Like size would be a probably better way for you guys to run the business regardless. Just don't have to deal with as many accounts.
I mean, when you go on there, you can buy it. And, that's, one advantage we have is we have an internal IP protected software. We can allocate our hash rate dynamically on the fly between self-mining and cloud mining, depending on a variety of reasons, whether demand for cloud mining and where Bitcoin price is and some other factors. And then within the cloud mining space, we can take that cloud mining hash rate and we can slice it up into chunks that the customer wants to buy, and generally in 1 terahash chunks. So you want to buy 1, you want to buy 10, you want to buy 100, you want to buy 150. We'll slice it and then we'll sell it into time periods, generally in 30-day time periods, 30, 60, 90, 180-day time periods, up to 360. Average durations kind of in the 90 to 180 contract range.
Okay.
But that's one advantage we'll be able to do this. So we'll have customers that will come in and they'll mine Bitcoin for a certain period of time, and then they'll stop and they'll come back in. We have institutions that will ladder out the durations. So they'll do multiple duration contracts. So it's kind of laddering it out, like you might do for like a bond portfolio. And, I think what's interesting is, we guarantee 95% uptime, and we've got this a very, very high retention rate on our customers, particularly on the institutional side. So it's close to 90% retention. So when people get on the site and they mine Bitcoin, particularly on the institutional side, they generally come back and will do another contract with us.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale? We've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
Let's move over and just kind of talk about the entire stock market right now, especially around Bitcoin mining companies. I mean, there's 20, 25 companies at the moment, probably expecting a few more to go public this year. Unfortunately, everything is very down, and we're seeing the sentiment online right now too. People are not as interested in Bitcoin mining stocks. People are not as interested in Bitcoin mining as they were, say, 18 months ago. But the podcast will survive it. We've been doing this for over 3 years now, so we'll survive it. But I think that the interest for some companies or for some investors is dwindling. I'm curious from your perspective, someone who's been in the IR chair for a while, like how do you keep pitching risk assets like Bitcoin mining stocks to investment bankers when times are tough and things are volatile?
Yeah, no, it's a great question, and I think it's whether it's a risk on or risk off world we're in, we're obviously kind of risk off right now, and Bitcoin really falls into that, and the Bitcoin miners do as well. Yeah. But I think if you we're of the opinion Bitcoin's not going away, and it's like any kind of risk asset, it's gonna rise and it's gonna fall. And I think, but the long term trajectory for Bitcoin, in our view, is up, and so. We're just when Bitcoin's low, we're trying to mine as much as we can on a self mining basis. We actually do allocate more to self mining when Bitcoin price is low because our cost basis drops a little bit too. There's kind of a scale in there, but I think it'll come back. I think on the retail side, I think the retail tends to be more in tune and kind of risk on, risk off, depending on where the price of Bitcoin is going and the broader stock market. We've got some institutional clients that are less, less, as nervous as there is, maybe not the right word to use, but, they're kind of still risk on, because they're looking at the long-term, price of where they think Bitcoin's going to be. And if you think Bitcoin's going to be, 150,000 or 200,000, whatever number you think it's going to be, and we're 80,000 or so today, do you worry that it's going to be, 78,000 next week and maybe then, up and down between 78 or 90 if you think it's going to be 150 in a year, 2 year, whatever your time frame is. Yeah. And I think the institutional side tends to be more longer term focused on that. So we'll see it come back but the cloud mining business for us, what's interesting is it does give you a little bit, some more stability on it. We have seen some institutions come in that want to, like as you mentioned, managed some of their exposure to that. And it's a fast process and it's a pretty easy process to do.
Yeah, there's a nice part with the cloud side where you get like the recurring revenue versus with Bitcoin mining, where obviously you're getting that recurring revenue, but it's so dependent on Bitcoin price. And so you have like a little more optionality there in just having the stability.
Absolutely. That's a great point. I think one of the differentiating factors for BitFuFu is this cloud mining business. It's been about 60% of the revenues for 2023, and through the first 9 months of 24, roughly 63% of revenue. So it's a big part of our revenue stream. And when we sell these contracts, we're essentially leasing or renting out the hash rate. We're locking in the price at that time, and we're getting paid at the start of the contract. So regardless of what Bitcoin price does over that contract, the contract price does the same. Whatever we sold the terahash for, we're locking that in. And so from a cash flow perspective, we're getting that cash flow up front. So the volatility on the revenue stream tends to be a lot less than it is for someone who's purely mining Bitcoin and kind of at the whim of where the Bitcoin price is going. So that's, for stability and managing the cash flows of the company, I think that's certainly an advantage that we've got maybe over some other pure Bitcoin mining companies.
And you guys don't do any sort of hosting. You guys pure play, just cloud.
Yeah, we do. We do have some hosting. Yeah, we do.
Okay.
Hosting and other. Because we also do mining sales. We actually lease miners from on a third party basis, and we sell mining machines on a third party basis. It's just been a smaller part of the revenue, kind of 1.5-2% on the hosting side. But we also have our own operating system that we introduced maybe a month or two ago. We started our own mining pool a couple of months ago. So we've got a mining pool, an OS. You can lease, you can buy, you can cloud mine. It's kind of the full soup to nuts, one-stop shop. Anything related to Bitcoin mining that you want to do. So we just want to make it as easy as possible for customers, depending on whatever framework they want to come in at.
Gotcha. No, that's helpful because the hosting side I think is going to be pretty brutal. So I think people in the US would like to deploy into cloud contracts, but like you mentioned earlier, the regulatory framework is difficult, and so you see often like these elaborate hosting schemes kind of get set up in lieu of that, as you know, and many listeners probably do know. So yeah, I think that kind of closes out any questions I have for today's show. Thanks for joining us. Any final thoughts as we kind of hop off the pod here?
Yeah, just again, thanks for having us on here. I think BitFuFu is a relatively new name in the space. We've been public only about a year. I think, when I find a lot of conversations, people don't realize that when you say, oh, you've got 20.6 exahash and 480 megawatts of capacity, and that number is going to keep growing. They're a little surprised that they never heard of the name BitFuFu. And so kind of part of my job is kind of get the word out, and obviously coming on programs like this is super helpful. And so we certainly appreciate the exposure.
Definitely. Well, thanks for joining us today, and we'll have to have you on later in the year to kind of get a check in on BitFuFu. Thanks, Charlie.
Happy to come back. Thanks.